Short video on Bitcoin, looking at a daily chart. Just want to provide you with a quick analysis of what I think this market is preparing for. I want you to notice a couple of things here. So we have a low here, okay? Then we have a high, and then we've got a lower low, right? So this is where they have taken out existing long holders, okay? We call that liquidity. The market has taken out and basically collected liquidity because people have their stops at that level. Notice this is also a gap, right? This up candle has no downside price delivery, okay? So if I just create a box there, it's between that low wick and this high wick. This gap is all buy side price delivery, okay? There needs to be efficient price delivery, so we need to have price coming down into there, okay? We don't get that until, if I'm going to draw that box across here, you can see now in that zone we have sell side price delivery. So they do this on purpose, okay? These markets are controlled. You don't believe it, that's fine. We all believe what we want to believe, but I know for a fact that these markets are controlled, okay? They have engineered liquidity because they were always going to come down below this level because of this inefficiency, okay? This inefficiency is created when the market speeds up, okay, and moves so fast that it leaves these gaps on the way up, okay? Notice on that move up, that is the only gap on this chart, okay? So they've come back down to do two things. Number one, to balance that inefficiency, right? And to take out anyone that's already long. All these folks who bought here, their stops are at the lows of where they got in at, okay? And then the lowest low has now been taken with this move down, okay? That's important, okay? So what does that mean? That means we have a low, we have a high, a lower low, and what do we have here? This is a higher high, okay? This is known as a break in the market structure. This is a downtrend, right? This move was a tiny downtrend, okay? We have a low, high, lower low, and so we have a low. So let's start from here. We have a high, okay? This here is a high, okay? We have a high, okay, which is there. That's where we're starting from. From that high, we make a low, okay? From that low, we make a lower high because it's lower than that high. We go lower, make a lower low. What do we do next? We actually make a higher high. That means we now have a new trend. This trend is broken because this was the last high. Right? This was the high that made the lowest low, okay? And once that's broken, we have a new trend. What that means is price, this up candle, the last up candle in this swing, okay, this was a intermediate swing high, right, that took the market down. Now we have a higher swing, okay? So the last up candle here is going to hold the market. And look at that. Isn't it magical how price is being held there, okay? So this level needs to hold, okay? And so far, it is holding. It's basically acting as support, okay? This down candle also needs to hold price, okay? So we've got two things, we've got three things here. We have a break in market structure because we had a low, high, lower low, higher high. So there's a break in market structure. We have this up candle from this swing high that will hold price. And this down candle will also hold price. So three things there for reasoning of bullish buyers, okay? Now, we've come down slightly, okay? The market is now trying to entice short sellers in the market who think the market's going down. What is being engineered here? Look at this double top, okay? Retail traders take that as resistance. So we have a high here, and when the market doesn't go above that, right, starts moving down, retail traders short that thinking this is now resistance, and they have their stops above that level. This is engineered, right? The market makers are doing this on purpose, leaving this here, because they are going to come back up through there and take out the stops that reside up here, okay? So right now, they are engineering a short setup, enticing short sellers to go short. I'm looking at a daily time frame, okay? Retail traders are looking at 5-minute, 15-minute charts where this might be a bigger downtrend, right? On a daily time frame, this looks small, but on a 15-minute or 5-minute, this might look quite significant. And you can see how they are engineering a trend. You got a down move, an up move, you got a down move, an up move, a down move. So they are basically printing a fake trend, okay? So for all the things I've identified to give you an indication that this is a bullish bias, with these double tops with higher probability and the way that price action works, this market, Bitcoin, in my view, will be repriced, right? Repriced to move up higher. And so we have stops up here, okay? We have stops up here, okay? And stops up here. All of these stops will be taken, okay? There's just too much money up here for the market makers to leave on the table, okay? Especially when you have these. This will be the minimum target, 72, okay? I'm not expecting the market to go below these levels for the reasons I've outlined, okay? So this is a lesson on price action behavior, okay? Go back, rewind the video. We have a low, a high, a lower low, okay? And a higher high, which now breaks the structure, and now we're bullish. This up candle, this last up candle in this swing, okay, this last up candle in this swing should hold price, okay? This is true support and resistance, folks, right? We don't use moving averages, we don't use highs and lows. This is your support, okay? This down candle is also support. The break in market structure is also support. Why is price held there? Look at the bodies of these candles. Why is price sitting there, okay? There may be a slight wick before the move that moves up, but that's the level to watch. Okay, open up your chart, go to Bitcoin, look at the daily charts, look at everything I pointed out, go drop into a smaller time frame and see is there what looks like a trend to the downside that retail traders may be looking at, thinking that this is a downtrend. I'll also say one more thing. This candle, okay, this upside down hammer is also indication that we will be going higher. That's also a little double high there, okay, equal highs, I call them, relative equal highs. So I am still looking for higher prices in this market, okay? And for your study, I want you to watch this market and see when do we take out these double highs, equal highs. Does that next move, if we get that takes out those equal highs, does it actually go through all of the highs that are still sitting there? There's a lot of money sitting up here for the market makers to take, okay? So watch the market, learn from this video. You got to monitor the market, okay? And look at how price behaves at the levels that I have pointed out. When it does, if it does go through that level, have a look at the move prior. Does it go out and stop out anyone that may be long already prior to the move up? So it can dig into the bottom end or maybe the middle of that down candle. So I would expect prior to this actually going up, if it is going to go up, that it will probably get to the face of that candle, which would mean it stops out anyone that's already long. Okay, so it'll probably be wick down when it's ready to move up, and then a violent move up. Okay, so I hope the video was insightful. Study the charts, go back and look at everything I mentioned in one video, pause it, okay, for your study, okay, and it's for you to understand how price action behaves. Okay, I will now talk with you in a future video.